Ja, herzlich willkommen zu einer neuen Ausgabe SI Talk und bei mir habe ich wieder ein Interview. David Winter, er ist der CEO und Präsident von Horizon Petroleum Limited. Die haben ein Projekt, man Petroleum sagt ja schon drinnen, es geht um Öl und Gas und sie haben ein Projekt in Polen, also mitten in Europa. Und das sind natürlich sehr interessante Gebiete, vor allem wenn man an den bedenkt, dass ja Russland, Gaslieferungen und so weiter, das heißt, wir haben noch immer ein wahnsinniges Shortage an Öl und Gas und da wären natürlich unsere eigenen Ressourcen, die wir in Europa hätten, natürlich sehr vorteilhaft. So, David, thank you for your time. I said in my German introduction that you are working in the petroleum space, oil and gas, in Europe, in Poland, and I said also Europe. Gas, oil is a problem for us. We know this since the Ukrainian war started, that yeah, we have a shortage of it. So, and we are looking always outside. And for us, it would be more helpful. We have more resources in our continent, and so we are not yeah, also not on the market and so on. And energy prices in general in Europe is a big issue for the industry and for the people itself. So, but maybe you can give us a small idea or a rough introduction what you're looking for, where you're looking for, and maybe what is the goal behind it. And then, okay, now I asked to ask. I have so many questions, so please
Okay.
start.
So yes, I'm the CEO of Horizon Petroleum, and I'm actually a geologist by background, and specialize in the types of reservoirs that are very common throughout Europe. I refocused Horizon to focus on gas development and production in Europe before COVID, and before the war, and I recognized that there was basically a shortfall of gas production in Europe. Most of the major oil and gas companies had departed most onshore Europe, and gas production was declining, mainly just from the legacy assets, and there wasn't a lot of new exploration or new development occurring onshore Europe. North Sea is a different story.
Mm.
So it got to the point, and I'm talking before COVID really, that Europe was heavily dependent on imports from three countries, not just Russia. Russia comprised about 42% of Europe's imports in the last decade, but also imports from the Norwegian North Sea and from North Africa through
Mhm.
pipelines. And then in increasing amounts of LNG, liquefied natural gas, were being imported in both from Qatar and and increasingly from the US.
Mhm. Mhm.
So there's always been a bit of a shortfall of domestically produced gas in Europe, so it was dependent on imports. And that was really thrown into highlight by the war in Ukraine
Mhm.
and the cessation of Russian supplies.
Mhm.
Europe was then scrabbling to find alternative supplies, which were increasingly met by increased LNG imports from the US and from Qatar and from the Norwegian North Sea.
Mhm.
Um, Now, the flip side to this need for gas was the European and EU policies were very much driven towards increasing power supply from renewables.
Mhm.
And they wanted to, one, in Western Europe, reduce their reliance on nuclear, particularly in France and in Germany, and replace coal. Coal has long been the major component of the European energy matrix, and as such, most of the coal mined in onshore Europe is fairly dirty and very polluting,
Mhm.
particularly the lower quality coals in Germany and Poland, and but also coal production was declining, and the cost to extract the old coal from old mines was increasing. So it needed to be sort of pretty much replaced economically. Now, gas from Russia easily replace some of that as gas to bring gas into Europe from Russia through pipelines was really quite cheap compared to alternative sources.
Mhm. So, but
But
you have now projects in Poland. Why you choose Poland? Is it Poland for its resources, for the reservoirs that's there, or is it also that maybe Poland is easier to get all the permits, bring it into production, and so on?
initially we looked all over Europe. We looked at opportunities in France, Spain, and other countries in Eastern Europe. Western Europe, from an oil and gas perspective, is quite difficult, especially given the government policies of wanting to cut back oil and gas completely. Eastern Europe is less so. They're very pro-business, pro-development, and oil and gas development is actually welcomed. We landed Poland partly opportunistically because we acquired the assets from a company that was exiting Europe to go and refocus itself in West Africa, bigger projects. And Poland has very productive basins, geological basins, which are very gas prone. One is the extension of the North Sea. So it was called the Permian Basin. It extends from the southern North Sea through Germany into Poland. And then there's the other basin in Poland called the Carpathian Basin, which sits in front of the Carpathian Mountains, which are an extension of the Alps into Eastern Europe and Poland. The reason we chose this particular two assets, one contains a very large discovered gas accumulation. This is not gas that has to be found for exploration. This has already been discovered back in the late 80s and early 1990s by the Polish state company at the time. And it flow tested gas very well from quite deep reservoirs. I know some of your audience are probably not technical, but in geological terms, these are limestones and dolomite rocks, which are naturally fractured. We don't need to do any further fracking or anything like that to stimulate the gas to flow to surface. And they flow at very, very productive rates.
Okay. So, and what is now really the plan? What is the plan from the company?
Okay. So the concessions were awarded to us in November of last year. And we plan to re-enter one of the wells that had previously been drilled, called WKN, and to re-enter that well, and we do what we call a workover. So we'll re-perforate the reservoir, the casing in the reservoir. We'll re-stimulate the reservoir with acid because it's a limestone reservoir, to then flow test it again to make sure it flows, and then we'll place it on production into a temporary modular gas to power facility. So basically a gas power generator that will generate electricity. There's an electric line that runs very close to the well site. In fact, it's so close we have to move it before we can operate. And we'll be able to tie in some of the electric power into that. It's got we're fairly constrained on the amount we can put to that. But there are other electricity transmission lines in the area that we can tie into. So we'll be initially selling about 6 megawatts of electricity from the gas generator.
And this is a mobile plan? Sorry, this is a mobile plan? So you bring the gas up, fire this to energy, and then put the energy into the grid. What you get out of it? What this means in revenue? What you can expect?
We will be producing gas at approximately 1.5 million cubic feet per day. And that to generate the 6 megawatts of electricity. That will return to the company in US dollar terms about $7 to $9 million of revenue, depending on price at the time, which in terms of free net cash flow would be about $4 to $5 million a year. So that's the very first step in development of these assets.
So and when I look at the presentation, it says that between 86 and 96, 7 drill holes was in this basin. Is this correct? So your plans is then now to work over all these other 6?
Unfortunately not. So all of those wells, bar one, other wells were abandoned, so we cannot use them again. So we'll have
Okay.
to drill new ones. There is one other well which we can't determine yet whether we can re-enter it on.
And what caused the whole thing? So the workover and the movement of the electrician line and so on?
It will cost us about 2 million to do the workover, another 2.5 to 3 million to install the facilities for the gas to power generation. So about that's in US terms. So approximately $5 to $7 million in total to put that on stream. Yeah.
Oh, when you say the workover costs 2 million, so mean this
US.
also? Yeah, I mean it is also that the well itself is relatively deep.
The well originally was drilled down to 3,000 meters below the surface.
Okay.
The top of the reservoir is about 2,700 meters below the surface. So we will have to re-enter the well, replace all the interior piping tubing works to re-stimulate the reservoir to flow it again.
The chance to succeed is high, very high,
We think
or
it's very high. The well was left in good condition by an earlier operator, Apache Corporation, the big American company, back in 1999. And they are a very good operator. So we're pretty confident from their reports that it's been left in very good condition.
So you say this is the first step. So, but what are then the next steps?
So the accumulation is very large. It covers an area of about 44 square kilometers. What we call gas in place, gas is actually in the reservoir, could total about 1.2 trillion cubic feet. So very big. So this initial step is quite a small step compared to the whole overall size. So we'll be developing this accumulation in a phased manner, stepping out from the initial areas. And the second phase will be to drill between 2 and 3 new wells. Now, because these are old wells drilled back in the 70s and 80s, operation practices at the time were not good. And the reservoirs have experienced some what we call damage from the inappropriate types of fluids that were used while drilling and completion. So we will plan to drill them with modern drilling technologies and complete the wells with modern completion technologies. And we think these types of reservoirs will perform very well.
So, and what this mean then in the end? So, okay, it's clear you start with this one well where you're really well known. You have make the workover. Then you start with the cash flow, and then you make the next steps to increase the production. But what's the mean?
About phase 2.
Yeah.
So phase 2 is 2 to 3 wells. That will increase production. Could increase production to potentially 40 million cubic feet a day plus.
In which time frame?
In over a 2 to 3 year time frame.
So 27, 28, 29.
27, 28. Yes. We will need to put in place a gas processing facility. And that will be relatively simple because the gas is very high quality. It's very high methane content of over 90%. There's very little in the way of nitrogen or CO2 or other contaminants. So it's very, very clean and pipeline ready. We understand from our recent studies that there is a pipeline tie-in location about 12 kilometers from the well site. So we've got a relatively short tie-in into the infrastructure in Poland. Poland has very good pipeline infrastructure.
So that's mean this gas to energy is only by this one well. The rest you really think you really sell then the gas into the grid.
Yes, the
pipelines.
The main development will be gas exported by pipeline into the Polish gas grid. Polish gas. And
yeah, go ahead.
40 million a day, that will generate free cash flow in excess of $100 million a year. So it's a very good economic very robust economics.
Okay, 100 million sounds great, but you need also a capital a capital to do this. So what this means? So in the first phase, what do you need? So you say 5 to
In the
7
first
million
phase,
costs.
we thought 5 to 7 million US. The second phase will, on top of that, will take us up to about $48 million US to drill 3 wells, put in a processing facility, and build the pipeline. So so where do we get that from? Obviously, equity will be part of that. But as we develop and put in the first phase of production, it will open doors to different types of financings, whether it be debt or some other form of debt type instruments. There are sort of offtake agreements with gas traders. They will pay forwards for future production with cash up front to help pay for development. There's those types of arrangements. Plus, my philosophy is not to develop these types of developments with 100% interest. No matter what stage you are in a field's life, even when the field's been producing for 10 years, there's still subsurface risk and uncertainty. And to mitigate that, I would bring in another partner to help offset some of the costs.
I think especially in the beginning, so the first 5 to 8 million that you start the workover and before you start generate any revenue, I think this is the tough part. So especially when
that is the tough part.
Yeah, so it's understandable. Then you have no revenue. Nobody can look at your numbers and say, okay, is there really a gas or something? You have always some risk in there. So this is the tough part. Understandable that you work with a partner, share your risk, but share then also your profit. But it's understandable. What I saw from my experience here in Austria, and we have also some interesting gas showings in the past, but they're not was really successful. Is always permitting. Is permitting in Poland a different thing? You say already they are more pro, and that they want to bring this back to production and back to power. But is environmental impact studies or something a problem in Poland?
So there's several different types of permits. First is the environmental permits to conduct work. They can take quite a long time, particularly if you're looking at bigger type of projects. And then there is permitting to access land and agreements with landowners, that kind of agreements. So, going into this project, we recognize that one of the critical risk factors is permitting and time delays due to permitting through authorities. In preparing for Lakavica 7, which I outlined in a recent press release, we've been pleasantly surprised by the actual speed that permits have actually arrived. We've concluded all of our land access agreements with the local landowners. We have also received, we're expecting to receive our environmental permit application approval in April. The authorities have already indicated that we've provided all the information necessary and this should not be an issue. We have other permits to start work on preparing the civil works around the wellhead. So the permits are falling into place actually pretty quickly, much quicker than we realized. But to me, that's still one of the critical risk factors that we have to manage. And I think the key to managing those risks is have the right people on the ground. My operating philosophy is I'm not going to operate this from Calgary. That would be impossible. We have a local team. We have an office in Warsaw, small office, with a general manager. And then we have operating personnel in Krakow, Krakow, which is the operating center for that southern part of Poland where we're located. And our operations manager is actually from the area. So he knows the people in the Lakavica area around the well site, and he also is known to all the authorities. So that's very good to have these sort of personal relationships with the authorities and with landowners.
Mm-hmm.
It helps.
Mm-hmm. Yeah, that's for
It
sure.
doesn't remove the risk entirely, but it helps to have the right people to know how to manage the system.
Yeah. People is a good point. You say, okay, you have a established team here in Poland, and it's very important to be in Poland. Then in Calgary, you cannot manage this. But who are the other people, the major players in by the company?
In Horizon
In
or
Horizon, yes.
Okay, so we have a general manager whose name is Mr. Cezary Filipowicz.
Mm-hmm.
He's got a lot of industry experience in Poland.
Mm-hmm.
He was a founder of Orlen Upstream. Orlen is the largest oil and gas company in Poland. So he's a founder and an executive of Orlen Upstream.
Mm-hmm.
He's also been an executive and a director of a large Polish energy services group called EUROS Drilling.
Mm-hmm.
So he brings a lot of industry experience and a lot of also government experience. He's been an advisor on energy matters to Polish presidents in the past.
Mm-hmm. Mm-hmm.
So he's our general manager. So if you like, he's the face of Horizon
Mm-hmm.
in Poland.
In Poland.
And then in Krakow, we have basically 4 who are all working for us on a consultancy basis at the moment.
Mm-hmm.
And they have a lot of experience of operating in Poland and indeed elsewhere.
Mm-hmm. And what is your background really from them that you with
As I said earlier, I'm a geologist by background.
yeah.
I've got, as you can tell by my color of my hair, a lot of experience in a long time experience in the industry. Now, I grew up in BP, British Petroleum in the North Sea, drilling in the Permian Basin in the North Sea, and also looking at developing fields in Holland.
Mm-hmm.
I've worked worldwide in places like China in the 80s, Indonesia, Australia, and Latin America.
Mm-hmm.
So I've got a lot of international experience.
Mm-hmm.
What's particularly relevant for what we're trying to do in Poland, in the Lakavica field, is the reservoir is a naturally fractured reservoir. And my geological background with a master's and a doctorate is in naturally fractured rocks.
Mm-hmm.
So they are my speciality. What attracted me to that field was my experience in developing these types of reservoirs, and in particular one in a company called Cal Valley Petroleum. It too had a discovery of light oil in Yemen, in the Republic of Yemen, in a fractured limestone carbonate reservoir. It had been operated badly, drilled poorly, and the results were not particularly good. They had mixed flows of oil from this reservoir. But the problem was it hadn't been approached in appropriate, using appropriate technologies for that type of reservoir. So then approaching it with the right drilling techniques, the right drilling fluids, and then the right completion techniques, the best well flowed at over 2,500 barrels a day on a sustained basis. And it commercialized the field and monetized Cal Valley, basically. Mm-hmm. So the field became worth about $600 million. So it's recognizing the opportunity set in the type of reservoir, but also understanding what drilling and operating technique, understanding the reservoir and how it's going to perform, helps you unlock the key to unlock the value from it.
Mm-hmm. Mm-hmm.
I'm joined here in Calgary with CEO Roger McMeekan, he's a petroleum engineer, reservoir engineer. He spent a lot of time working in Europe and in developing these sort of naturally fractured reservoirs. So between us, I think we've got the technical skill sets to be able to direct the operations that we can unlock the value of these fields.
Mm-hmm. Mm-hmm. Interesting. Interesting. I saw you are also founder and director of Canacol Energy.
I am, yes. So I've formed and I founded and built a number of companies.
Yeah.
Not all of them always successful. The first was a company called Cal Valley I helped build from a $50 million market cap to $600 million through the development of this field in Yemen. I then founded a company called Excelsior Energy, which is over here in Canada in the oil sands, and built that up from very small beginning to selling it to a larger oil sands company for $150 million. And then in parallel with that, I founded Canacol Energy, keeping my international roots.
Mm-hmm.
And that was gas in Colombia.
Mm-hmm. Mm-hmm.
We built that company up from, again, pretty much a standing start with a very small seed round to now having a $1 billion enterprise value and
No,
producing.
the interesting part is I'm shareholder of Canacol. That's that's the reason why I see it as, interesting. I know this name.
Oh yeah, unfortunately, Colombia's gone through some changes.
Yeah.
From a perspective, it used to be very pro-business, pro-oil and gas business. Now the new left-wing government is not so much.
Mm.
And,
but I hope better times are coming. But the most one thing we're not talking so far is the shareholder structure of this company. So I'm been now on slide 14, and this is a number from end of February. So you're really a small market cap and a really tight
market cap right now.
Pardon?
And I think that reflects that prior to signing the concessions in November, the end of November, we were a shell company, basically.
Mm-hmm. Mm-hmm.
Yeah. So I don't think our shares have, our value has been as yet fully recognized in the market. We've had some, obviously, improvements as we've signed these contracts. The share price has moved up. But still, this is still a $7.5 to $10 million Canadian company market valuation, and it holds an asset which has a potential asset value of $500 million. So it's a big thing. So I think as we move through this process to first bring on the initial production and then build through the development program, there's a large opportunity for a shareholder appreciation through as the stock gets re-rated to reflect more the underlying asset value.
Mm-hmm. Is there any bigger groups involved? So, or where are the biggest shareholders in the company?
Okay, so we have about, I think we've been having some warrants exercised recently. So our share count is now about 53 million shares. I would say 15% of that is in management's hands. Then the remainder there's quite a small shareholder group from when we were recapped in 2022. So about 60% of it is in known hands. And they're mainly high net worth investors, both in Canada and in Europe. Mm-hmm. And some smaller sort of family fund type money.
Mm-hmm. So, but to finance the first round, I think you need then now another financing or a partner to join you on this project or the first phase of the project.
Yeah. So yes, we will need to raise money, and in that regard, we've been working towards an equity financing in the near term.
Mm-hmm. When everything running fine, when we can expect the first production and the first revenue?
If all goes to plan, based on what we know now, we would expect to have the rig to be on site to do the work over in July, August timeframe, and then be on stream and generating electricity in the first couple of months of 2026.
Okay, so 1 year from now, it's a good chance that you already.
We should be generating positive revenue.
Yep, that's right.
Yeah.
David,
if we can get it on sooner, we can.
David, I think that was a really interesting first introduction to your company. Hopefully we have time when you make your work over and so on that we talk again. So how everything is running. Good luck also with the financing and also with the partner. And hopefully with all the permitting is running really well and also the workover running well for sure. That's clear.
Well, I think it's certainly looking pretty positive. There's always there'll always be hiccups along the way, but I think it's looking very positive. We've started well, and I think we'll be able to meet our targets and being on stream by early next year, and hope to see the market valuation respond accordingly.
One last question coming to mind: why the previous owner stopped the production in '96?
They didn't actually stop production. They tested the well. Apache, the previous operator, in 1999, put the Lakavica-7 well onto a production test. So they flared the gas for 2 weeks. So that's as long as it's ever been on production, on test, if you like, flowing gas. So we know the reservoirs can flow gas. It's just never been developed. And the reason for that is, I think, well, one, geological complexity. Certainly, Apache exited Poland in 1999. It was chasing actually other plays, deeper plays in northeastern Poland. At the time, this was a different asset for them. San Leon Energy, who we acquired it from, acquired it in 2008. They were really focused on the shale gas boom in Poland, which ran from about 2008 to 2013. And it wasn't a success. And many companies came to Poland, ExxonMobil, ConocoPhillips, Talisman, the big Canadian company, all came to test the shale, but it didn't work geologically. And they all left in about 2013. And then San Leon decided to leave Europe and Poland to focus on West Africa, which is when we started talking. So they were exiting. So very little work had actually been done on Lakavica, partly because it was complicated, and secondly because of strategic reasons from the companies that operate.
Okay, David, thank you for the first introduction. It was very interesting, and we will see. Good luck with all the upcoming work. Yeah.
Thank you. Thank you very much für Ihr Zeit.
Thank you. Jetzt kurze Zusammenfassung. Es geht um Gas in Polen und es geht um ein altes Feld, das eigentlich bekannt ist, die sehr groß ist im Verhältnis zu den anderen. Es ist in den 80er, 90er Jahren gebohrt worden. Er hat es auch gesagt, das ist letzte, der die Bohrlöcher gebohrt hat, war Apache. Apache ist eine extrem große US-Company gewesen, glaube ich. Die ist übernommen worden von den anderen, aber es war ein Multimilliardenkonzern. Und die haben dort ein sehr tiefes Bohrloch, 3000 Meter, 2700 ist das Reservoir. Es ist keines, das gefrackt werden muss. Das ist also das Gestein selber ist natürlich gebrochen und dort ist das Gas gebunden. Es war eigentlich nie in Produktion. Es ist 2 Wochen lang getestet worden, Flowtest getestet worden. Das Gas ist dann dort dementsprechend immer verbrannt worden, aber es ist nie an eine Pipeline eigentlich angeschlossen worden. Und wenn ich das richtig lese, ist da die Pipeline quasi 22 Kilometer entfernt. So, und was machen Sie? Ihre Idee ist jetzt, Sie wollen einen Workover machen von diesem einen Bohrloch, das jetzt noch existiert, das auch gut in sehr, sehr gutem Zustand ist. Der Workover kostet ungefähr 2 Millionen. Sie wollen dann das Gas, was Sie dort produzieren, über eine mobile Verfeuerungsstation zu Strom verfeuern und diesen Strom dann einspielen. Es ist so, dass die Stromleitung so nah ist, dass sie sogar verlegt werden muss für das Ganze. Und das ist quasi das Erste. Es soll quasi in den nächsten 12 Monaten passieren. Die Kosten liegen zwischen 5 und 8 Millionen US-Dollar. Und der Cashflow daraus liegt im 4 bis 5 Millionen Bereich. 8 bis 10 Millionen Umsatz, aber 4 bis 5 Millionen Cashflow. Und sie haben allerdings dort noch genug andere Gebiete. Phase 2 ist dann quasi, sie gehen her und wollen dann selber ein paar Bohrlöcher bohren, 3 bis 4, und ihr Ziel ist es, so bis 28, 40 Millionen Kubikfeet zu produzieren. Anfangs soll es noch mit 1,5 Millionen Kubikfeet, und dieses Gas allerdings soll dann in die Pipeline eingespeist werden und dann dementsprechend verkauft werden. Und das soll dann dementsprechend, man sieht es auch hier schön, wie der Cashflow soll eben auf gut 100 Millionen dann im Prinzip steigen, 2024 kann man sagen, 2029, sorry. Und das ist die Story eigentlich. Relativ einfach, relativ simpel. Es ist ein bestehendes Gasfeld, man muss da nicht lang suchen, man weiß, das Gas ist da, man macht einen Workover drüber. So, die Frage ist, wie kann man denn das Ganze finanzieren? Diese 8 Millionen Dollar, die man da jetzt braucht eigentlich, die sollen vor allem über eine natürliche Kapitalerhöhung stattfinden, aber auch über Partner. Das heißt, sie wollen möglicherweise das Risiko dieses Projektes einfach teilen. Einer investiert, wir kennen das auch von anderen Firmen schon, die auch in Österreich das gemacht haben, die haben auch das Risiko geteilt, haben großes die Kosten sich vom Partner zahlen lassen und hat einer dann nicht viel gekostet, dafür geben sie halt bei diesem Bohrloch dann einen gewissen Prozentsatz, auch wenn es ein großer Prozentsatz ist, ab. Und das nächste, quasi die nächsten Gebiete, damit ist der Proof of Concept erledigt und das nächste sind dann quasi das, was sie selber finanzieren können. Marktkapitalisierung der ganzen Firma ist 8 Millionen, also nicht wirklich, oder zwischen 7,5 und 8 Millionen. Es kommen jetzt gerade ein paar Warrants rein, aber sie müssen eine größere Kapitalrunde machen, anders wird es das nicht gehen, weil sonst können sie das Ganze nicht finanzieren und eben einen Partner reinnehmen. Und das Ganze soll laufen in den nächsten 12 Monaten. Er hat gesagt, Genehmigung, das ist für mich immer so ein kritischer Punkt. Wie schaut es aus mit den Permits? Er sagt, mit den Permits schaut es sehr gut aus. Es geht schneller als geplant. Die sind sehr aktiv, also es gibt ja eine Vielzahl von Permit, da fängt bei Umweltstudie an, aber auch die Landrechte, dass sie hin dürfen auf dieses Gebiet und so weiter. Und er sagt, das ist viel schneller, als sie sich selber erwartet haben. Und viele dieser Permits sind auch schon da. Und ja, jetzt muss man halt dementsprechend schauen, dass jetzt die restlichen noch reinkommen. Aber für mich ist der kritische Punkt die Finanzierung. Sobald die Finanzierung steht, wird das dann ein spannendes Thema, weil natürlich diese Marktkapitalisierung relativ schnell dann ausgedeckt ist mit dem Cashflow, was ja ist. Selbst wenn sie nur 50% von diesem Projekt haben, dann ist ja trotzdem der Cashflow 2,5 bis 3 Mille und dann ist 8 Millionen nicht mehr realistisch, dass die Firma bleibt. Also spannend, muss man sich weiter anschauen. Schauen wir mal, was der Aktienkurs dementsprechend macht. Hängt natürlich auch vom Ölpreis ab, klar. Allerdings ist das Gas bei uns so viel teurer aus wie im Rest der Welt, dass wir da immer ein Geschäft draus machen können. So, das war's von Horizon Petroleum was haben wir heute? März, 20. März. Genau, wir gehen vom Winter in den Frühling über. Deswegen ist es sehr interessantes Gespräch, dass wir heute noch mit Herrn David Winter ein Gespräch haben können. David, thank you for your time. Was very interesting. Good luck with all the workover, with the drilling, with the financing, and also with the permitting. Thank you. Thank you for your time.
Thank you very much.